Chairman, you are muted. Chairman, you are on mute. We are not able to hear your voice.
Audible, sir?
No, now you are audible. Now you are audible. Yes.
Okay. Krishnan ji and also CPE Rajendra Indirect Tax Committee. RK sir, over to you, please.
Very esteemed chairman of the GST.
Selva, if you have to mute, sir, just check.
Sir, he is audible. You can continue.
My voice is audible? Very esteemed chairman of the SIRC of ICAI, my good friend CA DC Jain, my good friend and secretary of the SIRC of ICAI, Dr. C. Abhishek Murali, my esteemed friend, my colleague, my subject mate, and an encyclopedia in the indirect taxes, CA V. Prasanna Krishnan. A warm good evening to all the participants and also to all the office bearers and the speaker here. This morning, CADC Jain called me and said that I have to come and speak a few words on this particular program that he is organizing today. And then I asked him, sir, who is the speaker? So he said, CAV Prasanna Krishnan. I was comfortable because I'm going to be there speaking to a person whom I know very, very closely, with whom I have moved very closely, and if I am permitted to say so, his first lecture in the area of indirect taxes was when I was the Regional Council Chairman of the SIRC of ICAI. So I can proudly say that CAV Prasanna Krishnan, who spoke first when I was the Chairman of the SIRC of ICAI, and I've seen him blossom from a caterpillar to a butterfly. Esteemed friends, from that day till today, I have seen Prasanna Krishnan professionally attired with a full shirt and a tie. We have shared many pleasant moments together. We have shared many debating moments together. We have shared many platforms together. And our passion remains the same, consumption taxes. Friends, this is the time for this 2018-19 GST audit. The whole of country seems to be running behind me with respect to the extension per se of the GSTR 9 and 9C. As all of you may be aware, the GST and Indirect Taxes Committee made a representation to the GST Council, followed it up, and we hope to get a favorable response by today or tomorrow. Let me tell you, friends. Nevertheless, 18-19 work has already been completed. Annual reports filed, AGMs conducted, tax audit reports done, income tax paid. What is new? But friends, statutory responsibilities have to be discharged, and we hope to hear good news very soon. The SIRC of ICAI is virtually everywhere and entered every room in the house, I must say. every room in the house. They have been conducting numerous programs, and DC Jain and Abhishek have become household names. Even the children running here and there, oh, DC uncle vanduttaru, Abhishek uncle vanduttaru. That is how they are now become more popular. And if there is any public elections held, and if children are allowed to vote, they will be voted because they have kept their fathers busy at home in seminars and conferences and lecture meetings, so that the fathers do not mind the mischief of the child. That is how they have kept the household head busy. And with the lady around also saying, Aurva, our Kastaland night SIRC program, Nimmadi, Sandosam. Esteemed friends, this is the kind of programs which SIRC is conducting. So humorously, I told you, but the serious point of that is that they kept us busy in this last 6 months, including the GST and Indirect Taxes Committee has kept busy all the members with so many certificate courses, with publications, review materials, webinars, lecture meetings, representations to the government, and so on. Friends, I'm confident that all of you are keeping good health. Your near, dear, and loved ones are happy and safe and fine. And the corona, which is there everywhere, should come to an end soon. It's a circle, and that which goes down has to end at some point of time. So I'm confident that the end is going to be soon, and all of us are going to physically meet, greet, and eat also. The bondas and bhajis that SIRC offers us at many times from various excellent hotels and nice coffee from Sarana Bhavan, etc. That they will offer at all times. In fact, there's the joy is greater when we meet physically. The work is done in a more efficient manner when we meet physically. Virtual times are times without a touch, without a feel, and without you knowing what and where I'm sitting with a virtual background behind. Of course, this is my office. So I'm sitting in my office, but we don't know where DC Jain is sitting. He's having a virtual background. And I believe Abhishek also is sitting in his office, and Prasanna Krishnan is also sitting in his office. So virtual can be deceiving, friends, sometimes. Friends, having said this, today's topic, valuation, a nebulous topic, let me tell you. It is simple, and if it is complicated, it is complicated. I should leave it at that. I will not venture into my great friend Prasanna Krishnan's thesis that he is going to present today on valuation. He's a big expert, I must say. I should congratulate DC Jain for finding him virtually, because we were searching for him where he is, and here he is today before all of us. I'm glad it has come back, and I'm seeing my good friend Prasanna Krishnan on the screen today. And his deliberations are unique, his points will be different, and his findings will be tempting, either for the taxpayer or for the department. Friends, I wish you all happy learning. I wish you great times ahead. I wish you happy times ahead. I wish you safe times ahead. Thank you very much, Chairman and SIRC, for giving me this opportunity. And thank you very much, Prasanna Krishnan, sir, for bearing me out for a few minutes. Thank you.
RK sir, thank you so much. Thanks for complimenting SIRC for the activities what we are doing. But I must return it back that the Indirect Tax Committee, which is the efforts which are being put by the committee. And I would also like to add that there's been a Tamil Nadu bill on this Trusts Act, for which the Central Council member Rajendra Kumar has voiced his concern, and we are taking up the step with the appropriate levels to see that that is addressed, where an unnecessary duty has been cast upon the auditor and not the client. We are taking up the matter. So just want to tell that Rajendra Kumar does not restrict it to just indirect taxes. Any matter which is required to be taken care, he is there around actually. So thank you so much, RK sir.
I will tell you, DC Jain, once the representation is ready, you may just tell me, and we
will be telling you, sir. We are working, and I'll be letting you.
Concerned bureaucrat, because we know him also, and you know whom I am meaning also. Thank you.
So that's the reason I made a mention, sir. Thank you so much. Abhishek, we can now formally introduce the speaker and take things forward.
Thank you so much, Chairman. A very good evening to all the participants who have joined in today. Good evening to our speaker, CA Prasanna Krishnan, a beloved Central Council member, CA Rajendra Kumar sir. As you're all aware, today's topic is once again on GST, and Rajendra Kumar sir gave a very nice opening. In fact, we have just completed our national seminar along with the Indirect Tax Committee that CA Rajendra Kumar sir had supported us, and it was a grand success. We had some of the best speakers from across India who joined us for that program. So in relation to that, we had got some feedback that we wanted a GST session on this specific topic. So Chairman and I felt we will plan this topic. And the best speaker for this is definitely CA Prasanna Krishnan sir, who has accepted kindly our invitation to join us today. And I have the privilege of introducing him. CA Prasanna Krishnan is a practicing chartered accountant in his own firm, and in fact he specializes in the field of tax laws with a specific interest in indirect tax laws. He regularly represents before various appellate authorities, Director General of Foreign Trade, VAT appellate tribunals, and in fact the GST authorities as well. Regularly, he is a person who shares his representations to the government. He has been instrumental in several excise, VAT, and service tax related developments, and he is constantly interacting with the ministry and bureaucrats. Further, on the specific invitation from the TRU of the Ministry of Finance in 2009, he represented the All India Tour Bus India Owners Association in 2 rounds of submissions before the CBEC and Ministry of Finance. In January 2018, he accepted a representation on the contradiction between the GST circular and GST notification at the Ministry of Finance. They released a corrigendum based on his submissions. In fact, he regularly gives various comments and feedbacks, and his feedbacks are in fact incorporated in several notifications and suggestions by the Ministry of Finance. Needless to say, he is a thorough professional who regularly shares his knowledge with all of our members and other professional institutes as well. He is a regular lecturer at the Regional Training Institute of the CNDG, the NASCEN, the Commercial Taxes State Training Institute in Tamil Nadu, the Zonal Training Centers for RBI, and other various government bodies as well. He contributes to publications of the ICAI and other professional bodies, and regularly delivers lectures, and in fact shares his academical writings as well. He writes several articles for Business Line, Excess Law Times, the Industrial Economist, etc. And he is a regular panelist as well on TV programs, radio programs on indirect topics, indirect tax topics rather. So this is only a brief introduction of him. We always enjoy listening to his lectures. So thank you so much, Prasanna sir, for accepting our invitation to be here today. We welcome you and we are looking forward to your session.
Learned brothers and sisters, good evening. Valuation, quite interesting subject. Even if I deliver the lecture, it will be very interesting. Very nice one. When the login details relating to this program was shared by one of the technical crew member of our SIRC, before he gave the very core inputs for me, just on a casual way, asked him that how the things are going in life. He was nice enough to tell certain personal things and then told that what to do, sir. He said in vernacular language, what to say, sir, or moonu nalla vishayam nanda edha kettada nandradhu, sir. He said that fine, it happens. Then immediately the next sentence what he told is, by the way, officially I have to tell you, first our chairman will talk, second our secretary will talk maybe, and third our chairman of IDT committee will be talking, then fourth you will talk, sir. No, I don't understand really this, whether it is coincidental or he means, I don't know. So then he immediately, with no break actually, immediately he starts to say that, what to do, sir? 1 is this, 2 is this, 3 is that, and 4th you. I don't know. I don't know that. Anyway, coming back to this one. Valuation. Let's have a quick look on the rudiments. Though we are all well-lettered professionals, having vast knowledge about the general topic valuation, still we need a very brief introduction as to the basics, and then we can move on to the main subject. What's your reply? Hope you can see the screen. What's your reply? I should not give this much time for a very learned population of this kind. In fact, I know. But your answer will obviously be 1000 is right. Now let's see the next screen. This is 10 and this is 1000. That's all we are going to talk about. Nothing more than that. Post demonetization time, what is the value of this 1000 rupees? We know. And today also, what is the value of this? We know. So there are certain amendments in GST law. There are certain clarifications issued for the purpose of this law, to administer this law, which makes these numbers totally a different one depending upon the context and also the time. Let's have a quick look on the basics. Today's discussion is going to be very interesting for one simple reason I tell you. There may not be many sessions wherein you will be having very few sections to go through, very few circulars to refer, and very few notification to see, and literally very few case laws to refer. This is one among us, very rare. And similarly, you will have a lot of questions. The administrators as well as the organizers of SIRC have shared with me their views as far as this program's structure is concerned. Adequate time shall be ensured for the purpose of question and answer session. Let us see that we are discussing very clearly the basics without any compromise. But at the same time, we will be having adequate time for question and answers too. There are hardly about some 48 plus slides. It may again hardly about 94 to 96 minutes in all total. But the presentation will be around some 1.5 hours only, or less than 1.5 hours only. We'll try to see that we are reasonably spending some time on few questions at least. Though you know the basics, there may be some beginners who may be interested to see that certain basics are learned by them. Then we will get into the core aspects. Maximum, I will say, I will take 70 seconds or 80 seconds, 7080. That's all. More than that, I will not spend. Your time, of course, valuable time, yours. Let's understand that what is the meaning of consideration. As you are able to see in the section 2, subsection 31, it is in relation to a supply of good or service or both, whatever it is, to any person. It includes payment already made by you. Maybe it may be in money, or it may be other ways too. Means it is in kind. What you are supposed to do in this case is to analyze. You are trying to see that somebody is doing this in response to or for inducing the supply of the goods. The words are very beautiful. Brazilian law, if you try to read, the first time when they introduced the word inducement and all, they tried a lot. And later, even Australia and other places also, even in New Zealand, also they followed later. But the inducement is an interesting word for the first time we saw in our tax law. We'll discuss in detail when time permits regarding this in detail. So summary is this. The takeaway for us in this particular part is this. Money is given or something in kind is given to make a supply happen. That way we'll see in some simple words. Let us forget about the fine text of law and all. To understand for the purpose of practice. You give something to make something to happen. What is the value of that something to be for the purpose of tax law? If it is money, fine. Money is the monetary value is seen actually. If it is not money, what to do? Kind. What is the value of that kind? If you are not able to find out anything at all, what to do? If you are able to find out, but it is very subjective, what to do? These are all the different questions which is coming there in practice. Now the monetary value may be for doing something, as I already told you, to supply the goods, to supply the service, to do that one, fine. It may be for not doing something also, or bearing something also. Say, for example, Dungar Baichand is calling me and saying that, sir, please deliver a lecture to our SIRC brothers and sisters we would like to offer you a small money of 10 crore rupees for your lecture. Nobody is believing. Though I'm not able to see this film, some of the faces I'm seeing. 10 crore rupees for this lecture. Nothing doing. Yeah, I understand. Just for example. So that is a supply, and for the supply you are giving the consideration. Fine. If in the same case, Dungarji is calling and telling me that, sir, we will give you 10 crore rupees, sir, for what, sir? Please don't come to us at all. This is also a supply. By not coming to SIRC and troubling you, if I am staying out, abstaining from doing something is also a supply. Doing something is also a supply. So, forbearing, if you are trying to say that if I should not go to court of law, you need to pay such amount to me. So that's a supply. That forbearance is a supply. Or if you are trying to give any kind of yes or no for a particular matter as answer, if you say yes and abide by that and get some money for that, it's service. If you try to see that you are saying no and accordingly you are bound by that, that act is also a supply. So it may be voluntary or other. Maybe voluntary, you can just try and come to, or by force, something like a government authority or somebody subject to certain exemptions can make the supply to happen. Still, that's what I told you, that inducement. They compel you to do certain supply. So even then it will be falling under the category of the same, and it will be, the valuation will be there and the consideration will be there for the purpose of this. So now, having seen these aspects at all, whenever it is monetary, it is easy. If it is not monetary, what to do? That's all the simple question we may be having in our mind. So, having said that, kind is having its own valuation. We'll be having rule number 27 to rule number 33 and additionally 34. Very simple set of rules. Not take much time at all. There are certain serious, complicated areas. There are certain deep pockets. We need to be very careful. Much often in professional discussions also, they are missed sometimes, unfortunately. So we'll try to see that we are carefully getting into those details and trying to see that we are understanding that reasonably, or getting a confirmation for the understanding what we already having due to the learning process, what we had. Coming back to this one. The monetary amount is given there in respect of a particular supply of goods, particular supply of service, or both, whatever it is, fine. But what about a money given as earnest money, or security deposit, or liquidated damage advance, or CD, that is a caution deposit, or some BSM, bid security money, or it may be CCD, complaints contingency deposit. Sometimes you give guarantee money. Just you will give the guarantee money, and then once the things are done, then you will take it up. Maybe in escrow account or otherwise also, whatever it is. What are all these things? In one single word, deposit refundable. You can just classify that, that's all. Anything taken by the person as deposit, refundable, it is not at all going to be forming part of our valuation process. If some money received as deposit, it will be returned. That's fine. Suddenly out of that one, if a part of that is appropriated, what will you do? The part what is appropriated so for the purpose of income is what going to be the taxable amount. In simple words, you do have residential apartments. You converted into commercial apartments. For our easy example, I'll tell you. Okay, right. Now you got a tenant for that commercial apartment. A tenant is coming there. You collect rent regularly from him. Naturally taxable, 18% you will pay. You collect from him a sizable rent advance. If you collect a sizable rent advance, which can be called as rent deposit, for easy understanding, rent advance, no doubt about it. Colloquially, we call it as rent advance. If it is rental deposit, for easy understanding of law, I say rental advance, and it is remaining to be refundable always, subject to few exceptions, then there is no problem about that. You will never be able to see that this deposit money is taxed at any point of time. And end of the term of this tenancy, you give back the money, the deal is over. Unfortunately, there was some trouble because of this tenant's behavior. He did not pay the rent regularly, 2-3 months. You had to appropriate that. He said that COVID is a big problem. So he is not able to do the business. As if when he was doing business very perfectly, he was paying every month. Then you say that, yes, fine. Well, if that is the case, let me see that as per our argument, I am taking part of your deposit appropriated towards my rent. This is our stand. Then what is taxable? 10 lakh rupees when you bought as deposit, it did not invite GST at all. Out of the 10 lakh rupees, when you take 1 lakh rupees towards the rent of a particular month defaulted by the tenant, then that 1 lakh rupees that month only becomes a taxable amount, not from the day on which it was collected. Because on the day on which it was collected is what was normally a deposit. So that's all the thing we need to see. I need to have very detailed discussion for certain matters. For the time being, this is enough to start with because the basic points are there to see that. Now, another important, very important definition what we need to know is market value. See, being a chartered accountant doing a great practice in tax laws, especially in income tax also, I need not explain you what is the meaning of this market value. Something like arm's length price or arm's length price itself, nothing more than that. What more to say? Generally, what you will be collecting for a supply of good or service from a recipient who is not known to you in an open market, or for the same kind of goods, for same quality of goods in the same time, for the same commercial level, quantity, supply, frequency, lead time, whatever you want to tell. When recipient and supplier are not related, that is what arm's length, ALP. For the purpose of all verification you do, even for a serious Section 92C process of Income Tax Act, prices also, you try to go for this only transfer pricing also, you rely upon basically this, and then whether ALP was there or not, you see. The same thing you're going to see here. So summarily, what we need to understand is, between two unrelated parties, in an open market condition without any kind of compulsion, a right fair price when it is fixed, what shall be that? Is the price which you can call it as market price. Why we have to talk about this? If it is not an open market, if you happen to be a related person, recipient and supplier, brother-in-law and this man, they are entering into transaction. What to do in that case? And the supply time and credit time and all are having some confusion to modify the value. What kind of valuation should be done there? This is a question. Before we go to the next part of our discussion, the short point what we need to make is, so how far it is very serious and related in our day-to-day life. As a chartered accountant, I'm practicing a little GST. I'll be very happy if you say that seriously you are practicing GST law. Fine. If not, at least a part of that I do. If you say, for such a person, a typical representative practicing CA, you say, fine. What is the need for me to understand the value? See, when the document is reading simply, this is the invoice, in the invoice, this is the value. That's all. Unrelated party, you see the value, tax is there, money is paid there by check, it comes to the bank, evidence is there, everything is fine. But when it is not there, so it's not so. It goes in a different way. Money is not received, partly it is differently coming back. Let us take our own example too. The example may be looking a little funny, but the intention is to see that we get into the things very seriously with simple examples. Say, for example, you did an audit, good audit as usual, very sincere audit, and the client is very happy with you. And he said that I will come and pay your fees immediately before you give me the attested copy of your financial statement. Again, nobody is believing. Nobody is believing. No, please, at least for example, you please believe. Somebody is there. Okay, for example, you believe. Okay. He gave the fees. And he says, a unique condition actually. He comes and says that, sir, what's your fees? At 25 lakh rupees. 25 lakh rupees. More or less equivalent to that one. 26.23 lakh rupees worth car, I will give it to you, sir. Brand new registered car, sir. Please, your tax, sir. Please don't say no. Now the fees what you are about to collect was, say, 25 lakh rupees. Around the same figure if you are getting a car. Will it not be a value of consideration? Will it not be having value of consideration? Now, along with the car, you have some other conditions linked. Very detailed discussions we will be having. Some other conditions if you have. What to do for that one? So that is where you need to clearly understand what is right. Then you can understand what is wrong. In other words, If it is a one way, if a traffic sergeant is standing there, if all vehicles are traveling towards one side, if one guy is coming in the wrong direction, it will be easy for him to spot him because he will be looking very unique. Very simple. All goes in one line, that guy is pathetically coming in the opposite side. Easy to catch. If it is chaotic, left to right, right to left, east to west, west to east, if it is running this way, how you can find? So is the way in which this law is also supposed to be understood. Let us simply understand that what is the value of goods as per the sections 15. So now only we saw the value of number. What we saw is consideration under section 2, subsection 30. What we saw is section 2, subsection 73, which is relating to arm's length price. Arm's length price is the open market price. But what is the value of goods? What the core section is saying there. Only 3 items. We need not discuss so much in this regard. A lot is there, but substance or summary is only this. What you are seeing in the screen is the entire discussion point. Totally, nothing more than that. Price paid or payable, maybe in kind, maybe in money. Between unrelated parties, buyer is different, means recipient is someone else, and supplier is not at all related to him in any manner, commercially, relation via human relationship wise, is no, that's totally different. Price is the sole consideration. Is there any possibility of giving something else also? Sole consideration is the word used here. For price, what more will be given there? Price will be a consideration. Some other kind also can be there as consideration, some benefits, some compulsions, some acceptance, some kind of sacrifice, some kind of concessions, some kind of future arrangements and understandings can be there. So if that's the case, law is very clear to say that if all these 3 are present, this is called as golden rule, set of golden rules. So if these 3 are there, that's a perfect transaction. See the record, take the value on the face of it, fix it. That's all the thing. Nothing more to do. Only when it is not there, you have the problem. Only when it is not there, what problem will be having? I told that the amount is liable to be paid by the supplier and should be incurred by the recipient. How it is? Actually, amount liable to be paid by supplier should be paid by him only. But why a recipient should incur the amount that is supposed to be paid by the supplier? That's where the twist. See, you are supposed to supply well-packed sanitizer, 100 pieces. See, nowadays, because of this pandemic, even example is also coming as a sanitizer, mouth mask, face mask. This is what is coming there, unfortunately. Apron and cap and all. Fine, sorry. Let us take some other example, right? Okay. 100 water bottles you have to supply. Well packed. The order is very clear. Well packed for the purpose of transportation. Having said that, this is the price, this, that, and all. First round, the supplier is supplying to you, the goods are not good. The package is very bad. You are very unhappy as a recipient. You said that, no, I'm not happy with the product what you have given to me. So let me supply the packing material to you, use that packing material so that it will be withstanding the entire transport and handling, you say. Now, please listen. As a supplier, the supplier is supposed to give a well-withstanding package as per the contract. But the recipient is saying that I will supply you the package material, packing material, you palletize that and give it to me, he says. Now, are you not able to agree with me that the amount liable to be paid by supplier in respect of packing materials are incurred by the recipient? That is all we are talking about. If that is the case, let me come back to the same example. See, the previous lot or consignment was involving, let me say, 10,000 rupees worth goods, including the packing material. This time, the recipient is supplying somewhere around 600 rupees worth packing material to him, with the condition that it should be well packed. Clearly. So now, will you say that 9,400 rupees charged by the supplier is right? Or will you say that the 10,000 rupees, what is supposed to be the value of the consignment is right? That's all. Your answer is right. The contract was meant to see that 10,000 rupees worth well-packed, palletized goods are supposed to be transported. Did you do? Yes, I did. Did you incur? I incurred 9,400 rupees only. No botheration. Value of that is 10,000 rupees. Over. Nothing more than that. So now this is the theory what we are supposed to do. There are certain serious exceptions. Having said this one, I'm going to talk about exceptions. At that time, a lot of practical difficulty will be there. That I'm talking will be very easy to listen now. But there are some serious problems which we need to address. We will be just coming to those points. Now, the normal transaction value may be affected. First, I told you that the price should be the single item, which should not be having any trouble. As I told you, know the intricacies involved. But at this point of time, I told that there are certain exceptions about which I will have to talk. First reference in this regard, I am supposed to make to notification which was issued in June 2018, that is 8th June 2018, circular number 47/2021. What is the contents of that one is, if free of charge materials are given there, especially mold and dye. What is mold and dye? See, you have a kind of an item, let me say this pen. For making this pen and all, you need not require big mold and extraordinary pattern held mold and dye. But anyway, still, you had a perfected mold or dye prepared for this manufacture of this pen. You did not have that workforce, machine force, etc. You outsource this work. And you said that I will give you the dye to make this extraordinary pen. You have to do the same structure, the same kind of holder, the same kind of slimness, the same kind of material, the same kind of bending, all these things you have to do. You tell. The mold and dye reaches the supplier. And the supplier is using very religiously this only, because you will not accept otherwise. So he is using very religiously all these days. And using this one, he is producing the pens for you and giving it. See, if he is not using materials at all, the work will be, the entire process will be studied very easily by you. Sir, there's nothing, sir, he is doing job work, sir. Very easy. The material is given by him, a dye given by him, what more there? Just he is doing the work. It's only job work. But the problem is not that. He is really a manufacturer. He is a supporting manufacturer for the original equipment manufacturer, OEM. But the dye and the mold are given by the supplier, the recipient to the supplier. So now the question is, like excess period, should we try to tax this also? Consider the value of this, amortize this or not, is a question. The interesting point is, board came out with a trade-friendly circular explaining the position of law in question number 1 itself, and told that whenever mold, dye and things like this are given there, they are not forming part of the contract generally. Please note the word generally. Generally is a very dangerous word. Very dangerous. See, one of my clients, typical client, will not seriously listen to us, will not seriously read our updates. We will be doing cross-check every time whenever possible there and setting him right. But once in a while, he will come for finalization or discussion, something like that. And the partners will be discussing, I will be discussing whenever needed. So this gentleman one day told that, sir, I want to come and meet you. 10 minutes appointment is required. Naturally, 10 minutes appointment is not a problem. Please come. That too, you want to learn something, you say, great. That you are not done in the past 1 decade to my knowledge. Please come. He came, talk something about this and all, and then still he had 2-3 minutes left. Yes, that's sir. Can I just ask one general question also? I said, fine. General question, I don't have any problem at all. Please ask. Sir, in my office, there is one plant manager to take care of plant activities. Okay. Information technology manager for information. Fine. Security manager for security, safety manager for safety, purchase manager for purchase. Sir, in every factory, this is what is happening there. Sir, what is your present time is going to be? No. Let me complete. See, the purchase manager is for purchase, sales manager is for sales, marketing manager is for marketing. Now, what for this man, the general manager, is that? This is his question. This is not my question, actually. Please don't mistake me. I told him, no, sir. General manager is there to oversee everything. General manager, this is his words, please understand. General manager is a person who does generally something, specifically nothing. Now, again, I'm saying there are very good friends of mine in industry who are very good general managers. This is his version, actually. But the takeaway for you in this sarcastic comment is, generally, when the law is saying something, specifically it will damage you somewhere. That's a, you can very easily expect. This is what will happen. Generally, if it says, specifically, it is going to destroy something else there. So here also, generally what it is saying is, if mold or dye are shared by the recipient to the supplier and his goods are manufactured as per his order, you don't believe that this amount is forming part of the value of the material manufactured by him, because after all the ownership is not transferred, mold and die remains to be the goods of the so-called recipient only, is understanding. This is what it reads. But the same circular in next page is telling, however, I told you no, whenever specifically it is found, this one. However, when there is an understanding that the mold and die also supposed to be manufactured and accordingly supplied by the supplier only, but the supplier fails, and the recipient is supporting for this purpose, then the value of mold or die should be reasonably amortized over the manufactured goods. That's all. That means the agreement matters a lot. This is where I started to tell that there is a serious need for you to get yourself comfortable in this arena and to support all your clients right at the time of business agreement themselves. Gone are those days where you do postmortem and you cry with the client that after everything is over, why you are not called this, that. They are supposed to take the help of learned chartered accountants. If it is not, they are the losers. Gone are those days. You can come very leisurely to chartered accountant, make any mess, and then you can come to the chartered accountant and ask. Not possible. They have to come or else they have to pay. I'm going to discuss something in few minutes about the post-supply discount, another serious and dangerous area. Again, a lot of mistakes are happening there. The trade is not aware and they pay heavy price. So that also I'll just highlight. Now, so this is fine. Mold, dye, jigs, something, some story is fine. Okay. Leave those things alone. Let them be aside. The question is, free of charge material, say in construction industry, the recipient is giving to the supplier some materials to them. Please use this, a particular kind of Belgium glass, a particular kind of X company's iron and steel, TMT, steel rods, only you should use. Please, I will give it to you. I will reduce from the value, if they say. What is the value of this? Contract is for 10 crores. Out of the 10 crore rupees, everything is, all material, labor, all supposed to be given by the supplier. But the recipient says that for the reasons what I told you, about some 60 lakhs worth material will be shared by him free of charge to the supplier. Using that, he has to pay. Is the story. You can recall what was the decision in Bayano Builders, which is a celebrated case of Sestat larger bench in service tax time. Beautiful judgment. 16B paragraph, unbelievable perfection to the core. Excellent judgment. But as far as this situation is concerned, what to decide, what to do here is, the theory is very clear, as the circular was also explaining reasonably. Whether the contract is for 10 crore rupees in which the supplier was required to supply this kind of materials also, or whether the contract for 9 crore rupees only, where the supplier was not at all made liable to supply these goods. Sir, this is what's a very simple thing. If I don't want, I have to remove in the agreement. That's all. No, that's very simple. I will do. Is the law is so flexible and fragile? It's not so easy in any contract. We'll spend reasonable time when time permits, but it's not so simple in any contract to go beyond the facts, against the facts, of course. You need to go along with the facts. You cannot go against the fact, actually. It's an art. It's an art to see that what you want to say you achieve without hurting the very given principle of law. Now, coming to this one. Normal transaction value will be affected by another item also, by inclusion, exclusions and all. What kind of inclusion, exclusions and all? Unbelievable. Still, it may be unbelievable for some of our fraternity members. The value shall include, for the purpose of section 15, any duty, fees, taxes, charges levied by any statute. Any statute. Can you believe? In other words, there shall be GST on tax, there shall be GST on duties, there shall be GST on fees, there shall be GST on statutory charges. Am I sounding clear? There shall be. You want some examples? Take, for example, the duties. What kind of duties? Stamp duty you have to pay in construction industry to the state department, maybe for what you can say land registration. Okay, you enter into an agreement to sell, and then you enter into sale deed. The sale deed is registered to evidence the registration of undivided share of land (UDS), and for that stamp duty should be paid. Forget about the construction related 2% stamp duty what you are paying. That's that. For example, I'm telling you. Now, we have to pay that duty. You are giving to the person who is your contractor and say that please take this money and pay. Whether the contract is going to include this value also. Now you slowly understand the seriousness, right? The law says duty shall also not escape from the wide coverage of GST, it says, levied by one statute. The Tamil Nadu state stamp duty, Andhra Pradesh State Stamp Act, something like that. So stamp duty you pay. Should I consider that also for valuation purpose? Question number 1. Fees collected by under any statute. Say, for example, any kind of levy, labor cess, right? Labor cess collected by the contractor from the contractee. Contractor is supplier. He is collecting the money. Straight away, only the cess, labor cess of the state is collecting. It is supposed to be paid to the government only. That is whatever it is. Now, whether the GST law is applicable on this cess collection also. Labor cess, not compensation. Compensation is union cess. That's you forget about it. That's not a discussion point at all. Whether on the labor cess, GST liability is there or not. Because apparently it reads so. Take for example taxes. Sir, leave other things around. Entertainment tax in a cinema theatre. Cinema theatre. Long time back we have heard this word, cinema theatre. No, there was a structure like this. People used to go there once upon a time, before Christ, I think. So yes, that's the gap of what we have felt. So such a structure is there. Hope everything will be okay and people will be happy. Fine. Coming back to this one, entertainment tax. In entertainment tax collection, what kind of coverage you are seeing? The law is saying that GST is applicable on any tax levied under any law also. What to do now? Entertainment tax is collected in the, let me say, in the 125 rupees, 120 rupees a ticket itself. You as a person, recipient of the service, you pay that one, knowing that you are paying towards entertainment. The theatre owner says that out of this 120 rupees, he paid 8 rupees to the ex-municipality, something like that, or municipal corporation, right? Now, the law says that this entertainment tax cannot escape from the large embarrassing hands of, not embarrassing hands, large embarrassing hands of GST law, right? That is also covered. That means the gross collection is taxable. So how it is possible there in a federal structure? India is a country with a federal tax structure. So the state government is levying some tax. How the central government can levy tax on the tax? After all, it is a tax by the government, whether it is state or central or local. So what is possible there is a question. When law is permitted to tax with a reasonable power, there is nothing wrong. We want to challenge this, or to go to the constitutional bench only. And that is also not going to be a serious problem because already there have been several cases of this kind. So the summary is, in these cases and all, whenever you are seeing some collection, you may be please be careful. You may please be careful because you cannot exclude these taxes or these duties or this kind of cesses, board cess or other cess, local cess and all from this one. It is supposed to be coming back. Pure agent concept is a totally different area where we will discuss. Subject that you can decide this. But here, the simple enlightenment intended is to ensure that this is not excluded. This is included for the purpose of valuation. I already told you incidental expenses, whatever you say in respect of your supply. I'm a supplier of goods and you may please pay me some packing charges included in the price of the goods. Not only this, loading, unloading, hamali, darmida, door delivery charges, special palletizing charges, any charges you would like to say, transportation charges, cartage charges, head load charges, you tell anything. All are includable. Gross value is taxable under GST law. Whether this law is taxing left and right everything, how it is possible? The value of the goods or services clearly includes anything incidentally spent for that and reimbursed. That's all. The matter is simple. Now, somebody is collecting interest or some late fees or some kind of fine or penalty for delayed payment. I'm a supplier. If you are given 1 month credit time, please give me the money in 1 month. Beyond 1 month, I will be charging you late fees. I will be charging you additional interest. What should that also included in the consideration? Yes, that also included in the consideration. So how you will tax, sir? Because when I am supplying, I am aware the time of supply is very clear. You will refer to section 12A or section 13 depending upon goods or services. The invoice are going to tell this one, or the time to raise the invoice as per section 31 is going to tell you, you can tax me. I myself don't know when I am going to collect exactly by stopping the ticking clock of interest. When I am collecting, after 15 days, 25 days, 85 days, I don't know. Neither supplier nor recipient is aware that when this clock is going to stop. Then when are you going to collect? At the time of supply, I don't know whether it is going to be late element. All law is very clear. As far as this matter is concerned, for the supply of goods or services, go by the invoice or the time given for the purpose of that under section 12 or 13. Separately on payment basis, the extra interest, late fees or penalty related to delayed payment will be collected by the government. Clear? Extremely clear. Salt on injury, no doubt about it. Now, non-government subsidies relating to supply. What is a non-government supply subsidies? Any kind of support given by any person for subsidizing you, sir. Government subsidy to some extent, I understand some backward area subsidy, that area, this area, some special time subsidy or any kind of business development subsidy, we know. State gives, central gives, sometimes it's okay, whatever it is. Who is giving in private any subsidies, sir? Is a question. They are. May not be in the exact name of subsidy, maybe a variant of that. See, sir, a consumer good involved company is there. Let me say a dealer, white goods dealer. He's selling AC machines, he's selling, let me say, tablets, he's selling mobile phones, something like that. Being a supplier, you wanted to introduce your next range or next kind of quality product. Model is changed. Your biggest enemy is not your competitors. The existing models which are there in the market, that should get vanished. Then only you can get into the market with your new model. So who is your enemy? Your own goods which are there in your market are the enemies for you. What you should do? Who's the enemy? How to who's the enemy? The goods will not move, just like that. So you call the dealer and tell him that, Mister, you please sell this goods at a well subsidized price. The dealer says that well subsidized price I will sell, sir. Who will sell? Just compensate me? I will compensate. 10,000 rupees worth goods. Push it for 7,500 rupees on one day. Some dhamaka sell, something you will sell. So people will come and buy. Whenever you are reducing price something, they will come and buy. I don't know why they buy. They will come and buy, whether needed or not. And 7,500 rupees is the unit price. Just like that, in a swift manner, everything went away. Now, naturally, the price at which the dealer bought is 9,000, anticipating that at 10,000 he will sell. The price at which you compelled him to sell is 7,500 rupees. He lost 1,500 rupees already because of this per unit. Now 1,500 rupees should be given to him. Who will give? You only agreed, manufacturer. So you will give the subsidy in any manner, adjustments, current account adjustment, separate payment, whatever it is. Now, if such a kind of subsidy is coming there in records, the officer has got his own clear source of information to fix it. No, sir, I will ask him to issue the service invoice. This different. Law is clear. You may just enlighten your client that this is not outside the entire, what I can say, watching process of the government. It's easy for them to collect the information and come to this matter. The very serious point, post supply discount, which is called as PSD by acronym. What is post-supply discount? So discount, what you are giving there at the time of purchase itself, maybe quantity discount, cash discount, something you give. It's very, what I can say, apparent on the record. 1 lakh rupees if you bill, you say that 2% cash discount. Are you paying now? Right now? Fine. Okay, not 98,000 rupees. So the value is 98,000 only. No problem. It's very clear because post discount only it is coming. Some other quantity discount you are giving there because of certain reasons, some slabs, number of goods and all. That is also fine. Perfectly right. But the point what we need to note here is you supply first, give the discount next. Maybe after a week, maybe after a month, maybe after a year also. You don't know what is the discount you are going to give. Why? It is contingent. It depends upon certain other aspects involved in that one. What is certain other aspects involved in that? It may be a case where you would like to see first some 5,000 pieces are purchased by you do. Beyond 5,000 pieces, the price will be 98% of the price what I am charging now. Great. Then buy 10,000 and cross 10,000 rupees from in this list, in the level. Beyond 10,000 unit, from 10,000 first unit, 10,001 unit 10,001, I will charge you 96% of the price. This is your condition. So you are very honest. 5,001 to 10,000, 98%. 10,001 to 15,000, 96%. Still you go there with 94, 92, 90, you go back. As you sell, so you get the deduction, discounts. But please understand here, in the trade, you need to see that this trade is happening there. As it happens, so you will be giving the discount. So you are not aware in the initial stage itself that how much he is going to buy. In fact, the buyer, the recipient himself is not aware how much he is going to buy. For a particular period with reference to that period, they will be doing this. Now, if it's so, what we are supposed to see here in this matter is the law is specifically giving some two conditions. Conditions. Yes, conditions. You can reduce your supply value referring the post-supply discount. What's happening there? Post-supply discount is reducing your value. It's quite natural, no? 100 rupees is the value. Because of some kind of understanding, you say that 98, then 96, then 94, something like that you say. Now the question is, 100 is becoming 98. 98 may become 96 beyond a particular level, may become 94 also for somebody. Fine, perfectly okay. And if you want to claim back again from the government that, sorry, the price for which I paid the tax is wrong, it is on the higher side, it is not 100, rather it is 98. So I have issued a discount related credit note to the concerned person. Please reduce my liability. Let me adjust on my own voluntarily on the basis of this. Let me file one GST or one para 6, I will fill up GST, credit note, I will put whatever it is. This is perfectly okay provided two conditions are followed by you as a supplier. One, there should be a pre-entered agreement already before the time of supply or at least at the time of supply. Two, it should be specifically linked to the relevant invoice. What is this linking specific agreement? What they are talking about? The law is simply clear. Law is very simple. It says, sir, you are a supplier? Yes, sir. Would you have a recipient? Yes, sir. Going to deal something as to the discounted price? Yes. You conceive an idea of that kind? Yes. So then as a supplier, enter into certain precautionous measures. One, between you and the recipient, let there be agreement. What kind of a write in some letter and also sir between you? That's up to you. You enter into an agreement, preferably on the day one of the supply itself. Day one of the supply number one itself, advisable. What you are supposed to write? When you, I told you, when you cross 5,000 units, you will be entitled to, let me say, from 5,001, this much percentage. When you are crossing 10,000 units, from 10,000 first unit, that much. Enter into it. And having entered into the agreement, please make a reference in a footnote at least in the invoice. What reference to make? The amount involved in the above mentioned invoice is subject to post-supply discount wide agreement dated so and so. So now I told you that there is a serious need for a chartered accountant's consultation in GST well at the time of doing the business, not after doing the business and completing the transaction and messing up and creating indelible records is not possible. This is a classic example. His bill itself is supposed to come to you, you have to approve in your office, then only a supplier can be happily doing the business to ensure that he is earning the money. He is not wasting the money. If he wants to waste the money, if he is so much if he is having it, that no one can help. If he believes that the hard-earned money by him should be really and seriously used for the purpose for which it is supposed to be, then he is supposed to come to the chartered accountant and get his advice seriously. The last condition in this matter, the post-supply discount matter, is certainly as a supplier, your money supply value will be coming from 100 to 98, even 98 to 96, 94, 92, anything, provided you reduce your supply value, right? Reciprocally, the recipient should reduce the discount. Now, recipient should reduce the discount what? From what? Discount is going to reduce his ITC. Sir, for 100 rupees, you gave a credit of 18 rupees, sir. Now you are saying that it is 98 rupees by forcefully producing the agreement copy, just making a reference religiously in the invoice copy as a footnote. Having said that one, you say that I have established that it is 98 rupees only, right? If it is 98 rupees for the purpose of law and it is accepted by the government, naturally the reciprocal effect in the recipient side should also be what? 98 rupees only should be considered as supply value, related tax only should be considered as ITC, right? Justified, right? And just. So the recipient should reduce. So how I know that he will reduce? You are supposed to know it by giving the credit note. A supplier is the person under section 34 will be having a complete right to issue the debit note or credit note. Issue a credit note, make the GST or 2A by force to bring down the value of ITC to him, glad, comfortable. So make him comfort. Bring to his knowledge, sir, I have reduced. You are in trouble. Don't play. You have taken 100 rupees related credit. Those days were different. Our understanding was different. Now we have moved to the phase, different phase. So you are compelling me to give you a discount. I gave happily. Once I gave the discount happily, you are supposed to reverse the ITC relating to discount. Don't claim the old gross value related ITC. It is no more available to you. Then, in a case where I told price is the sole consideration, what are all the disturbance can be for the price? I told that it may be affecting you by incidental money, tax may be there, cess may be collected, discount should be there, post sales discount will affect your money. All these things are affecting the price. Fine. I said that the recipient and the supplier should be, non-related, unrelated parties, I said. If they are related, first you should understand who is related. Who are the relatives? Very good philosophical question actually. In tough time, you will definitely ask, for which this is not a right session. I do have a separate reply, but who are the relatives? It's a very fine question. At least once in a lifetime, you will ask. You would have asked, actually. That is a different question. As I told you, on philosophical ground. That's a different plane to discuss, actually. Now, as far as relatives are concerned, under this law, the persons who are officers or directors of another company's, another person's business. Your director is their director. Your officer is their director or officer. And legally recognized partners. So you will have one partner here or trustee here. They will be a partner there who is controlling the business on the opposite side. Such persons who are employer-employee. Between you and your employee, there is a serious relationship. And if the sales is happening there between you and your employee, and if you say for example, you had a 42-inch plasma TV in your office. One of your employee worked well, proved his caliber, and was eligible for a production-based some kind of recognition by you. You just detach immediately out of emotion the plasma TV and handed over to him. So this 42-inch plasma TV is in recognition and token of our love and after you. Please take home. It's a gift from our office. Take it. Now the transaction is having a value. Fine. But the value, you say, sir, pay 10,000 rupees out of your salary, I will deduct it. That's enough. Such a great service you have rendered. No. This is not a case of arm's length price at all. There is no presence of open market value OMV within the meaning of section 2 subsection 73. This is not a clean consideration for the purpose of law. There is a relationship between you people are related as employer and employee, then law will have its own eyes and hands to use. It will understand the real value of this, and it will decide that for such a plasma TV of 6 months old or used plasma TV, what shall be the value? For that value only will be liable. So it is unfair, sir. I just got benefit of 10,000 only. You got, but you are related. Sir, the same plasma TV sold to 10,000 rupees for 10,000 rupees to an unknown person for some reasons. For some reason, I had this IPL disturbance always in my office. I detached the plasma TV and some passerby was there. I just called him and gave him what much you are. I'm having 10,000 rupees. Take this money, get out. I told. Then what is up? 10,000. Yes, 10,000. Unrelated party. Price is the sole consideration. Paid or payable consider. Arm's length price is present. When they are related, the story is entirely different, as I was explaining in detail. Now coming back to this one. You may have persons directly or indirectly owning or controlling the other business by holding some 25% share in the other person's stock or in other person's shares to see that the 25% share is making them to decide certain major decisions. At least they can block the special resolution. You can easily understand in Companies Act. Special resolution cannot be passed. If you are having 25% shares, suddenly you will be able to see that you are blocking the special resolution. All major decisions in the company can be blocked. Whether it is influencing or not, you can block. That's enough. So you are a person influential in the other person's business, then you are becoming a related. Then one of them directly or indirectly controlling each other. Controlling is a nuance, not nuisance actually. Please don't misread. Controlling is a nuance of this. What kind of controlling they are referring to? See, if it is a shareholding company with shares, you can understand by way of what I told in Sublim before. But if it is a company which is controlled, company means maybe a company without shares. Company without shares, yes, companies by guarantee, public company, section 25 company, something like that. So controlling is referring to decision making in day-to-day business and major decisions relating to the financial and other administrative matters. So it may be referring to even a trust, it may be referring to a society, it may be referring to any kind of association of persons, or maybe body of individuals, maybe. So, or other way also we can take another combination. There is one third person under him, beneath him, A unit, B unit, two different companies are under complete control, directly or indirectly. Even then, the A unit, B unit, which are under the common control of a third person are falling under the relationship, they are called as related parties only for the purpose of law. Any transaction between them will be colored transaction that will be subject to the detailed scrutiny of law for the purpose of valuation. Per se, what the value you are seeing on the records will not be accepted. Together, they are directly or indirectly controlling the third person. See, I told that controlled by third person. Next, I am saying that controlling a third person. If they join together and becoming, say, for example, A limited company, B limited company, both public limited companies. They're trying to see that they are holding the shares of C limited company, which is a subsidiary for them, common subsidiary. This guy is holding 50%, that guy is holding 50%, or something like that. Or this guy is holding 51% holding company. The another person is having some kind of a strong hold on that one with some 40% shares, say for example. So same family member, blood related, so that is also coming. Somebody can be a sole agent for India, Malaysia, Singapore, Burma, Nepal, Bhutan, Maldives, Pakistan, Afghanistan. You are the territorial sole agent for our product. What is this? Territorial exclusiveness agreement. None of my product will land in this land without your knowledge. You will be the first person to take those goods on import basis. You will see that those goods are sold only by you. Without your clearance, it will not go to the second person and you will be able to sell in the market. Is what agreement is saying in substance. If such a relationship is there, a sole agent, a sole distributor, or a sole concessionaire, will all be coming under the category relatives. What is the use of reading in detail these relatives? All these relatives are disturbing your normal transaction value, what is there on record. They will make the officer to enjoy his power to come inside the transaction and view that it may be a wrong amount, and he will try to establish. I'm just clearly saying that he will be entitled to reject that one, and that's not the case. Prima facie, there is a point for the officer to get into the detail. It may be accepted by him on a reasonable ground, subject to the real reasonable process. He may accept or may not accept. But the opening is there for him whenever it is between two persons who are related. Supplier and recipient are related. The valuation rules are talking about this kind of serious issues at the outset. Always Act is there to say what to do, but rules are there to say how to do. Whenever you read what to do, having known that what to do, how to do also you are supposed to know. Then only the procedures can be workable. Law and practice, that's what the word we use. Law is to read, practice is to do. Act is there to read what to do, but rules are there to read how to do. Now let us understand how to do. Rule 27 of CGST rules 2017 amended. So many amendments, left and right amended. Now this is the version. Finally, what is left out is this actually. Okay, and tomorrow will it be there or not? We have to wait and see tomorrow only, right? So here, the determination of value of supply rules, talking about mostly the same words what has been told in section 15. Whatever we have discussed, open market should be there. If it is not there, comparable value should be taken. If the comparable value is not available there, a reasonable reference should be done for the same kind and same quality at the same time for the same commercial level. Same thing we are seeing. Same. All what we are doing is same. But then why you are having that rule separately, sir? You have said everything there in the law. Why you are supposed to do? As it may be prescribed is the word told there. There are certain simple examples and simple procedures told there in the rule for the purpose of understanding how to implement it. That's why we refer to this. Value of supply of goods, services are both between distinct or related persons other than an agent. See, we had two problems in related party category. One related party is maybe blood related or commercial related person. That's one category of disturbance. The another category of relationship is sole agent, sole concessionaire, that kind of people we saw. Now we are talking about one part, valuation of goods or services are both between distinct and related persons. Now we see, between the related persons, there is a transaction. What should I follow? Normally, what the open market value for a supplier with an unrelated person shall be the value. This is generally. I already told you, whenever I say generally, specifically something else is there as damage. Fine, okay, you are not accepting to the open market value, or some residence itself is not there. Say, for example, somebody is there in Andhra Pradesh as a manufacturer. Product A he is doing. In Andhra Pradesh, he is having an agent to do all these works and all he is supplying. In Tamil Nadu, he is having an agent to do all these things and all he is supplying. If that is the case, a comparable value can be there for the purpose of this is fine. Suddenly, he is finding some market in Jammu and Kashmir. Jammu and Kashmir, straight to the top. Somewhere near Leh, he is having some good market for him to sell his product. Somehow he is found. So as a country is going in good direction, maybe he will be able to do these things and all in future. It's possible, it appears. So he got a good market in near Leh, Ladakh, somewhere he is found. He is sending his goods. Now, a comparable price we need to try. But the Tamil Nadu agent is not so comfortably comparable with the Jammu Kashmir agent for several reasons. We need not discuss into detail, we know easily. So how to compare this? Open market value is different. How I can compare this? For these things and all, apply rule number 30 or 31. What is the rule in 30 and 30? Why are you jumping from 28 to those things if you are not aware? See, law is making the arrangement very nicely. It tells very normal way of understanding the case. Slowly it goes to the abnormality. Whenever something goes wrong, you go to that. If still it is going wrong, you go to the next one. If it is still going wrong, you go to the next one. So that's how it is trying to make you to travel comfortably. The navigation is perfectly happening there. So now you see that in this case, as a supplier, you can have an option in this case. What are you going to do? You can try to see that you are supplying at an open market value. I told you, you are not ready to do that. Fine. For an unrelated party, what price you will be selling? I will be selling for 1,000 rupees, right? 90% of the price, that is 900 rupees, if you are offering, but you are selling to your own, the related person only, then what will happen? That's fine. 90% if you are offering, which is related to unrelated person. Then for related person also, if you supply, law is not disturbing you. It believes that it's fairly good consideration. So now I have a doubt. If I sell for 95 rupees to unrelated person, and if I'm selling for 90% of 95 rupees, is it accepting? As I already told you, a comparable can be there for the purpose of this. Never the law is rigid to say that a price of a product is always standard. It's constant one, it will not vary. So you have to sell at a price. No, not that way. It accepts the constraints of the trade. If you have to sell for a variant price for a reason, it accepts. Only thing is it justified in all cases is the question. In all cases, are you doing this? Related, unrelated, whatever it is. You are not influenced by the relationship. You are sincerely fixing the price for all. If a relative is purchasing 10,000 pieces, in the same way, if 10,000 pieces are purchased by another person, what price you are giving? If the same price, if you are mentioning here, no problem at all. At least a resellable product, 90% if you are going to just offer in that case, same product, a person buys, sells. Buys, sells, that's all. Because he is one of your distributor, let me say, one of your distributor, not sole distributor. Because I already told you this rule is not relating to sole distributor matters. So you have several distributors in this country. So the normal price what I will sell in a market is 100 rupees. The reseller distributor, a reseller stockist purchasing from me, if I'm supplying for 90% of the unrelated party price, if I'm offering this as price, whether the officer has to accept, he should accept. Clear? No problem about that. Now, continuing that one, if the recipient is eligible by law to take ITC fully, the involved price is generally deemed as open market value. If you are supplying for 90 rupees in the given case as resellable product, buys, sells, buys, sells. In that case, 90% of the OME. Fine. That OME is an OME for him. There's nothing wrong in that. He can get price as base, he can add his market price, then he can go ahead with it. Not a problem. Principal to agent, agent to principal. In this case, Sandal, as I told you, this 90% value is also applicable for the purpose of this. Earlier, what we saw is other than an agent, who are all the relative, 90% story for resellable goods. Whereas in case of through agent, principal to agent, the agent to principal, if the supply of goods are made or received between them through an agent, then open market value or 90% of the market value will be this. Now, having said that one, we'll see this important topic. I told that if 27 is not workable, go to 28. If 28 is not workable, go to 29. Sir, if nothing is workable, what to do, sir? Go to 30. Go to 30. If you are not able to decide within the parameters to you for the purpose of this, try to apply this. What are we going to do in this? 110% of the manufacturing value, or cost of production. So what about the cost of service? Then cost of service. If you are offering, then it's a rise price. What is this? I say a price, I pay for the price tax at the rate given there. Why the law is compelling to an artificial rate of 110%? What's that actually? See, if you offer a price which is dispute free, who is going to be bothered about that, sir? Pay the tax on that and close the story. It's not the case. You say a price. As I told you, it is not, price is not the sole consideration. As I say, it is between some related party, it's not unrelated party. As I say, there is a consideration related confusion clearly. Price payable is having its own disputable points. Then what will happen? The officer is entering into the picture. So he says that what is the price of this? See, you know the law to decide this, how to plan, how to do this and all. But the story is totally different. You have a complete knowledge about these provisions. The officer is also having, or he is supposed to have, as the case may be. He is applying his own knowledge. Whether he understands this or not is a problem. Better you go by the safe route. You offer the right price, you get the benefit of that. You try to see that you are complying with the provisions of law, it will be easy for you. If not, he will come and take up the role of a cost accountant And he will say that this is the cost of acquisition, this is the cost of production, this is the cost of providing these services. That's how he'll be coming to you. So it's avoidable. Now, having discussed this, sir, I tried that 30 also, sir. Still, it's not workable. That 110% and all, the cost of provision of service is not possible in my service industry. The manufacturing cost is not arrived duly. A lot of old stock, new stock is there, confusing it is there. Some of the free material supplied is involved there. The value is different one. During the pre-GST regime, the goods were received. Some confusion. You are not able to easily arrive at the value. What to do in this case? Please understand. 27 to 30 is workable, supposed to be workable. Please try to make it. Don't come to 31. If you come to 31, what will happen then? Instead of explaining very academically this matter, though it will be looking a little funny, but the matter is quite serious. It was a dark forest, dark night, thick forest. Two guys were walking. The one guy is a very pious guy, very much worried about the travel what they are having at that night time in that particular place. It was known for lions roaming here and there that time. Then another guy is there who has read so much unnecessarily about animals, human, this, that, and all, about astrophysics and all unnecessarily. The big problem with the guys who are lettered a lot is they will not be silent. They will be giving too many advices, whether without knowing that whether the opposite party needs it or not. He is trying to give you his own advices. Do you know how the lion behaves? He said that why I should know about that. No, you should know. Especially in this situation, you should know. Lion is an animal which is very egoistic. It is having some slanted eyesight only, I understand. It is my finding, he says. So it will try to slap the prey with about some 1 ton weight or 1.5 ton weight with his forehands, 3 times maximum. If you are standing not in a perpendicular direction, rather on the side of it, I think it will not be able to hit you very perfectly. So if that is the case, we will try to see that. We are standing left side, right side, this, that, and all. And after 3 times, whatever mightier it is, it will get bored and run away from it. And one more thing, what I want to, he continued, by the time roaring sound heard. Lion. This pious guy told, I already told you in the midnight time and all, don't talk about this lion nonsense and all. Why you talk these things and all? Now roaring sound is, the roaring sound is coming near to you. Then this man said, no, don't run. It will catch you. You cannot run as it is running. So you try to remember 1.5 tons, right side, left side, perpendicular direction, this, that, something he was talking. When the lion is coming there, who is bothering about this wool and all this? Pious guy started to run like a mad, that covered run away. This man also ran in a hurry in dark and got his shirts and pants torn. Maybe till dawn they were running in some particular direction. And of course, early morning they met at the border of the jungle. Pious man was very unhappy. Much more unhappy person was this lettered man. The lettered man very furiously asked him that you are a fool. I very clearly told that you have to understand what I told, how a lion will behave. This and all I explained you very well. You do not listen to me at all, you run away. The pious man very gently told, Mr. Lettered man, I sincerely acknowledge your knowledge, no doubt about it. But please understand, how a lion will behave when it is so hungry, you know, because you are a very lettered man. Because of you, I also know. I know too, because you told me. Whether the lion knows? Whether the lion knows is a good question. Sir, it is in hungry, sir. Left side, right side, 30 degree and all. It will not come back with a proper campus and all. It will give you a hit. By hit, if it is giving a slap, that's all. The story is over. So he ran away. Now, we are drawing analogy from that one here, from this funny story to this serious topic. You know what is 27, 28, 29, 30, all these things and all. Maybe I told you, I know. You heard me, you know today, fine, okay. Whether the officer knows, that is very important. That's a cranky animal. It may hit at any time. We don't know. With due respect to very nice officers, gentlemen are there. They will do anything as they work. So advisable to see that you put yourself under 27, 28, 29, 30 reasonably. If no choice is there, be ready to meet a big lion. That's what will happen. A very liberated lion it is. It will come from the cages. Now specific evaluation is a last set of item we have to see. State-run lotteries are there. State-authorized lotteries are also there. Different percentages are there, saying some modifications they have made to make it equal. 12, 28, all these stories have settled down. You can just have a look on it. Betting, gambling, horse racing, race club related matters and all, how to value it. You just see the face value of that bet. What is the amount paid to the totalizer? That's enough. What is there on the face? That's very important. So in this case and all, that equation as 31A is saying. Similarly, foreign exchange buying, selling. What is your profit? On that profit you can pay, it's easy. If a Reserve Bank reference rate is not available for that one, 1% of the transaction value is the liability. Or, sir, I'm having foreign exchange transaction. For euro, I gave dollar. What to do now? See, for dirham and dinam or any kind of franc or any kind of amount, Singapore dollar, if I give rupees, that's fine. Or for Indian rupees in exchange, if I get franc or yen or any kind of this money, is fine. Okay, it's easy. Your reference rate stories and all applicable. Or 1% of the gross consideration is applicable. If I don't have that, I buy euro, in turn I give US dollars. I give US dollars, in turn I buy Canadian dollars. What to do now? In those cases and all, convert both the currencies into INR, multiply by 1%. That will be the value for the purpose of paying your tax. How about the other cases? What other cases? Can I go for a compound levy specifically for this? Yes, at the option of the person concerned in the commencement of the year. Right at the commencement of the year, decide that you would like to go for compound levy. You cannot just jump here and to that, because this is not political party. This is serious tax compliance. So you stay and stick to your particular option. So if you have opted compound levy scheme, I am going ahead with, then go by the compound levy scheme throughout the year. Then when the next year starts, jump to this one. So should I write to anybody that I'm going? No, not necessary at all. Once you opted in the first return, it's going with that. You need not write to somebody that I'm going to opt this or that. Having opted, you cannot change. If you change it, penalty will be heavy. You will be paying more money out of your pocket, which is not collected by you at all. Coming back to this one. There are rates given there, which I need not explain, very academic. 1% up to 250, 0.5 plus 1,000 rupees for up to 10 lakh rupees, beyond 1 lakh, above 10 lakh rupees, maximum up to 60,000 rupees, 0.1% of that, and 5,005. These are all the things which are compound levy at your option is available when you are a foreign exchange money changer or dealer, right? Rule 32, air travel agent, simple calculation, 5% of your domestic price, 10% of your international base price. That's all. How I will know the domestic base price or international? The price at which commission is calculated is the domestic base price or international base price. There will be base price. So they are adding this traffic congestion charges. This won't worry anything about it. The reference will be made to a one amount for commission working out. What is that amount? Your 3% commission, 10% commission, 9%, whatever it is. They will say one amount on which you work out the commission. That is what the base price. Nothing more than that. Just strictly catch that, work out your 5%, 10% on that one. It will be easy for you to work out that. So that is the value. On that value, go ahead with the tax. A life insurance business. A little different topic actually. Let us not spend much time on this. Those who are interested to ask queries about this, we can understand it. The focus is on one basic point. Whenever you are doing savings, whenever you are having investment, savings coupled life insurance, investment coupled life insurance, those things are all not directly hit by GST. That part alone will be omitted. That means that they are not going to charge the GST on the savings related collection or investment related commission. But leaving this amount, what balance is rest, that will be coming under. What the balance amount is there in the gross premium will be coming under this taxation. What about the single premium GST policies and 10% in the first year, 12.5% in the subsequent year will be the value. So on that basis, you will be paying tax. In all other life insurance cases, 25% you can take. 25% straight. The premium into 25%, that's well. In case of policy, with the entire premium only towards risk. Only towards risk. No other savings, investment, nothing is there. Whatever. Commonly will not be auto. So take that the real value of that, work out the value of that purpose, see that how much is right. Tax is 18%, service being that. Work it out. Last but 2 items. Buying and selling the second-hand goods. Buy and sell. Very poor guy he is, but anyway, we'll just think about some big guys also. Very big warehouse, very big godown, all these things are. So there you buy the goods, sell the goods. That's something. With or without minor modification, without changing the nature. Pressure cooker, old pressure cookers bought, old pressure cookers sold. This is business. Several materials they buy. Old watches, old things, so many things they buy. And this is a very unique world. There are so many people who say that a particular goods is useless, never should be inside the house. And there are a set of people who say that it's extremely useful, having a great value for that one. It should certainly be there. And I want to buy it. Especially a old goods only, a set of old goods only. And old good is having its own value. This is another school of thought. So you have to both people to meet at a market. That's where we are going to have our view. The difference between buying price and selling price by the second-hand seller, used goods seller, will be that. Just why I take some simple examples. Somebody is buying the cars and selling the cars, all used cars. What should be the GST on them? Strictly speaking, they should be having this kind of second-hand goods. What is the buying price? What is the selling price? You can offer it. Sir, when they bought, it was for 10,000. When they sold, it was for 12,000. Your story and all will be workable on that 2,000 rupees. 2,000 rupees into the price at which it is all fine, good, great. But he purchased for 12,000 rupees. Unfortunately, it could be sold only for 10,000 rupees. What to do now? When he's selling at loss, government is very gracious. It will not tax you. Exceptionally, sometimes they are also a little bored to be very stiff and rough, right? Sometimes they are a little, what I can say, flexible. When you are having negative in this business as a second-hand seller or a goods seller or a used goods seller, you don't have a problem. You can ignore that negative margin. You need not pay GST. So positive margin, you have to pay the price for it. Always this positive is making you to pay a price. Positive corona, positive profit. This will be making you to pay that amount. And negative is different one. Redeemable voucher. What is the value of this? The value at which any service or goods can be fetched or redeemed. That is what the value is. That is clearly 100 rupees worth material can be bought. 200 rupees worth food can be bought. 300 rupees worth some exchange can be done. That's what it reads, right? That is the value of the voucher. Nothing. What price you buy, you give, that's all different. What is the price at which it is printed? That matters. On that only GST will be applicable. Beyond that, for some other purposes, government will be able to give you a notification that it is a claim. The important concept, pure agent. Who is this pure agent? What is this concept? Very simple, sir. You are a chartered accountant. See, actually, it's a simple copy of Service Tax Determination of Value Rules 2006, Rule number 5, sub-rule number 2, strictly speaking. If you know about that, I need not discuss in detail about that and take your valuable time. What it is talking about, what it was talking about earlier too. Let's take a simple example to stay in our mind. With simple examples, we'll close this matter. You are a chartered accountant. You are ready to render a service relating to incorporation of companies. You say that pay me 50,000 rupees. This is for my services, prima facie. And if there is any liability to be paid for the purpose of registration of companies, I will be able to pay. The SPICE form, this form, that form, whatever it is, I will be INC forms and all, I will file it. The government liability I have to pay. When it comes to the reality, about some 16,000 rupees you have to pay to register the company. That means that about 34,000 rupees was collected by you as your fees. Company got successfully incorporated. They came to you, you are a nice person, you got it perfectly completed, you are a good chartered about that. Did it. Now, what you got is 50,000. You are issuing your bill for 34,000. What about the 16,000? That 16,000 was paid by you, or rather I will correct it as through you to the government. Who was the real service provider? Ministry of Corporate Affairs, represented by Register of Companies, Chennai. Who was the recipient? The ex-private limited company which you incorporated. Then who are you? You are the pure agent. Why are you pure agent here? You are not gaining anything personally on this particular matter. The incorporation certificate in the name of the company, sir. You are not the owner of the company. Any benefit, any kind of what I can say privileges of this are all for whom? Not for you. The bill is supposed to be in his name only. It is there. The payment is made by him. Through you, it is reached the account. So this amount of 16,000 is not at all forming part of your bill because you are after all pure agent. Is this the end of the entire story? No. The important condition is you should not have gained anything monetarily out of this. What monetarily out of this? Actually, it was 15,990, sir. The money what you paid to the Register of Companies. Please don't charge 16,000 by rounding it off. Don't round it up. If you round up, GST department will round up you. The problem is the 10 rupees is changing the color of the transaction. 15,990 back-to-back charged by you without any profit element. Safe. But if you add just 1 rupee or 10 rupee with that one, then it is not a pure agent collection, rather it is impure agent collection. This is forming part of your consideration. So for 34,000 plus 16,000 you will be liable. If at all you want the 10 rupees, certainly, rather practically I will tell you, just on the lighter side. 34,010 may be your fees. Keep that 15,990 undisturbed. Undisturbed. It cannot be disturbed. Sacrosanct. Leave it as such. Then you are safe. So this concept, pure agent, in practice, wherever you can apply this, you can try to do it. Rate of exchange of currency is a very rare concept wherein Section 12 and Section 13 references are made for the purpose of deciding what is the rate of exchange for determination of the value. It's only a reference. For the purpose of this, even reference to Customs Act is required there. Fine, whatever it is. Now, let us quickly understand the last concept in this case. Little serious concept also. This is a very lengthy topic to discuss. I would like to see that we are discussing only a little, what I can say, focused point on this. Because I have to refer 3/2019 notification CTR. I have to refer notification 4/2019 CTR, 5/2019 CTR, and also 6/2019 CTR, read together with 20/2019 CTR. Large, quite large. In PDF in A4 size, if you print out, it will be coming around some 120 plus pages. We cannot and need not discuss entirely about this. We will focus on our topic because I don't want to talk about the exemption given for this reverse charge mechanism introduced by 5/2019, or the kind of time of supply told by 6/2019, or the modification made by 20/2019. Because we will enter into another different topic actually. What is the taxation relating to construction industry? Totally different topic. Let's focus on this matter. If any question is there, if needed, we'll discuss. Now to the point. When somebody is transferring the development right as a landowner to the developer promoter, who is the developer promoter? Take section 2ZN, 2ZK of RERA Act, you will be able to understand. Those who are developing the apartments, lands, buildings, they will be liable to do this. Landowner in a joint venture is giving a right to develop the building to the builder, to the construction company. If he is giving that, in that case, what shall be the liability? Who is the supplier? The right has been given by somebody to another person. The supplier is right-giving person, landowner. What is the value for this? Right is given. Land is not transferred. What is the value for this? Law is saying that whether we agree or not, whether we dispute or not, is different one. Law is simply saying that whenever transfer of development right is given there, the recipient, namely the developer promoter, shall be the person responsible. I told about the reverse charge. Let us not get into the detail. The value, this is what our point. The value thereof shall be the value at which a third party will be buying to the nearest date of this transfer, the most near point at which he will be buying a similar kind of flat will be the price. In other words, on 10/6/2020, joint development agreement entered into between A, landowner, B, the developer company. A is giving transfer of development rights of 45% of his lands in the complete liberty of that person. Balance land he is retaining with him, but the entire land is given to the permission. Permission is given to him. Men and material can enter into the land. So 10/6/2020 is the point at which it is happening. Liability is arising or not? Yes, there is a supply. What is the supply? Transfer of development rights. Who is liable? Developer promoter, who is the recipient. On what this should be calculated? What is the valuation method to be followed? What is the nearest point at which, from the time of this transfer of development rights, but the nearest point at which a flat is booked or a similar place is booked for this purpose? How to value that land and this? It is not workable at all. He is getting flats is different one because that is a supply. The second line in the screen, what you are seeing is very easy for you to understand. Valuation of flats constructed for landowner by the developer. In that case, you can understand. How to understand this? This is a very debatable point for which we have to spend very detailed time. But the short point is, law is very clear. You accept or not is a different one. Please don't buy any argument from anybody that the law is confusing, not confused. The law is subjective, not subjective. You will not accept this different one. But the law is not having any subjectivity. It says very clearly by referring the date at which transfer of development right is happening there. Consider that the nearest point you go there, what flat is booked there like yours, you try to do it. Disputes can be always be there. Disputes are always there. Why you should pay that? I will not accept it. There is a small point. That time you have to see that one point. The notifications what I refer to. Give some exemptions also. Don't want to discuss in detail, but I have to mention here. Simple logic. If all your flats are getting booked, well before the date of completion certificate, you are safe. As a developer promoter, within the meaning of section 2, subsection Z and ZK of RERA Act, you are safe when all your flats are getting booked. What is the meaning of getting booked? You have some money or something received by you, you book and allot it and an agreement is entered. That's what booking, effectively. If it is booked before the completion date, all are booked. I don't understand the logic at all. If my flats are getting booked well in time before the completion certificate, why as a person who is doing the developer promoter role, I should be given exemption from the reverse charge relating to the transfer of development of rights? Here's a question. Serious point. Government is not leaving something easily. It leaves something and it takes something. It's easy for them. See, what's the point to be noted is, when all your flats are constructed well before the completion date, and it's all booked or allotted for the purpose of law, what are you doing? You are committing GST on entire set of flats what you are having in your hands. Government has been assured that you are going to pay GST on all flats. Good revenue. Fine, in an unfortunate time like this, out of 20 flats in a particular apartment project, only 12 got booked. 8 could not be done. It did not materialize. What to do? The formula will be the carpet area of this 8 divided by the carpet area of 20 is a proportion in which you will be liable to pay the transfer of development rights related valuation, what I explained a few minutes back. That means what? If you are not selling, you are punished. If you are booking well before the completion certificate, you are safe. Now, what is the moral of the story? Try to see that you sell well in advance before completion certificate, or don't get completion certificate till you sell. That's all the thing. You have RERA, fine. You have controlling authorities, fine. It's all fine. But what the point to be noted here is, in a case where you are not able to sell, at least see, if you are not able to get a set of shoes for your legs. Try to see that shoes are there. Cut your legs to fit to that. That's all the thing. So don't go to the completion certificate. Try to see that you are completing all your booking work. Then safely avoid the transfer of development rights. And as far as finally the construction matter is concerned, you construct the flats for the landowners. That will be valued, whatever is lateral one. At the time of handing over, what is the nearest comparable one? You just see. Or first occupancy related one, you see. The comparable one. Sir, I don't understand what is this comparable. Sir, see, 2 flats model is there. You compare only 2 flats model, which is relating to third party for the purpose of deciding what is the value of the flat for landowner. Sir, he has purchased 3 flats. 3 flats. Then you compare the 3 flats model, which is sold to the unknown third party buyer. No, sir, in the first floor, the 3 floors are there. Then you are also supposed to go to the first floor. If not, at least second floor. So try to match equal kind, equal quality, and understand that what the third party buyer is paying. In an open market, unknown supplier, namely construction company, unknown buyer, third party buyer. He comes, buys, you sell your services. You are supplying your services. The same is the value for the purpose of landowner also, because he is also purchasing the same. So that way, you can try to see that, you can plan. Okay. Now, if you are having any questions, we'll be happy to take up over to the organizers.
Yeah, Prasanna, thank you so much. Thank you for an excellent presentation. There's only one question which has come from Lakshmi Narayanan G. Ganeshwar.
Yes, please.
He asks, if manufacturer gives subsidy to the supplier in tax invoice, to whom should the to whom should that subsidy value be included of? Whether TA to the recipient or TA should be raised on manufacturer?
Okay. The
It's
tax
invoice.
Understand. See, the question from our learned brother is, so subsidy is given, it will be included, you said, fine, okay. Where it will be included, whether to the recipient or to the supplier. Subsidy is given by another guy, the manufacturer. The money is received by the recipient. So who has to raise an invoice? See, as I already told you, the flip side of this is very serious and dangerous. See, if the subsidy is given by the manufacturer, what is happening there? He has got some service from you. You in the sense, the recipient. If the recipient is not giving any invoice at all, there's a big trouble indeed. So better to see that the arrangement is made in such a way that some kind of marketing support, some kind of networking support, some kind of customer patronage networking program, something you have several words in your business. See that the money for which you are collecting, you raise a proper service invoice at 18% from recipient side to the supplier, that is the manufacturer, story will be closed. Safe. If you are not having any kind of agreement to link properly this, that and all, definitely the subsidy what you are giving is going to disturb in such a way that the supplier's value is going to come down. Because it's something like a credit note, what he is giving. Sir, for 10,000 rupees, he sold you the goods, sir. For 1,000 rupees, he is giving a credit note or he is giving some kind of subsidy note to you. What is the meaning of that? Having received 10,000 from you, 1,000 rupees if he is returning, for 9,000 only he sold. Whether that guy is paying 9,000 rupees one related tax only or 10,000 rupees tax only is different story. The office is going to spot you, the recipient. The safe thing is create proper record for this purpose, agreement and invoice. You raise invoice, say fine. If you don't raise invoice, manufacturer is in trouble because he has given the subsidy. You are the really troubled person because you are receiving the money. Your ITC is in trouble. Because the officer is going to say, sir, having paid 10,000 rupees, you claimed to me under section 16, you have paid 10,000 rupees completely for the supply, enjoyed that. Beyond 180 days rupees, you have not paid the 1,000 rupees. Sir, I paid 10,000. You paid 10,000, sir, but received 1,000 rupees back, right? Then where is the story of 10,000? Now it is net 9,000 effectively. So you paid 9,000 only. I will not allow credit for 10,000. To avoid this situation, enter into perfect agreement and try to do it, or safely let the manufacturer have the decency and honesty to reduce his service value or supply value to 9,000 by giving the credit note to you well in time. Well in time, that matters a lot actually. And you try to reduce honestly your ITC for the 1,000 rupees. If these things are not acceptable for you, you please raise tax invoice. Two options I'm giving. Best option is manufacturer giving credit note to you, you accepting credit note, reducing your ITC, he accepting reduced supply value and related reduction in his liability in the GST is good option. The next option relatively little not good. Okay, fine, still okay. You will give in invoice. If neither of this is happening, there third thing will happen from GST officer by your notice. Yes, please.
Yeah, if members still have further questions, you can raise your hand virtually. I will
Yes.
unmute them and they can speak.
Yeah, that's
More
what.
minutes. Yeah. I think we have SK Venugopal Rao. I'm trying to unmute you.
Okay.
If you have any question, you please let us know, sir. SK Venugopal Rao. SK Venugopal Rao, sir.
There is some difficulty in connecting him.
Yes. No, he's the question mark. We don't know whether he's asking a question.
Okay.
Venugopal Rao ji? No.
No, he's not connected.
So you can type your question if there is anything. I unmute again. Members, if anybody has any question, you can raise your hand virtually. I will try to unmute them. Or you can even put the question in the QA or chat box.
Yes.
Keshav. I'll try to. Yeah, Keshav ji, I've unmuted you, sir. You can ask your question. CA Keshav ji. Keshav, unmuted yourself. You can ask your question. Okay, few questions are coming for CPE credit. Members, CPE credit is automatic as far as SRC is concerned. It will be given depending on the time you have attended the program. So kindly attend the full program. So that's one query which had come.
Okay.
Somebody said send the feedback link again. I will share it again.
Yes, please.
Feedback link as well as the material link, both I'm sharing. Sir, there is a question by CM Ramji.
Yes, please.
There is one argument by companies when they transfer goods at 90%. They need not apply cross charge to branches.
Sorry, can you come again?
There is one argument by companies when they transfer goods at 90%.
Okay.
They need not apply cross charge to branches.
Okay. No, as we had been discussing about that actually, if there is a case of resale, pure resupply, they buy, sell. See, head office is sending, branch office receives, and then they are going to sell. If that's the case, it is otherwise than an agent. That kind of relationship is otherwise than an agent means branch. In those cases, and all law permits, instead of 100 rupees, if you can say that 90 rupees is my supply price at which I am offering GST, and then branch will be offering 100 rupees maybe that time. So that 90 rupees is perfectly okay. It is permitted. So you can go ahead with that. You can. Any other questions?
I'm just checking.
Please.
We have one last question we'll take.
Yeah.
CA Govind Raju.
Yes,
What is
please.
the value of taxable supply in the case of promoter against JDA in the
Okay.
case of 45% and 55% sharing?
Yeah, okay. Percentages are always there, 45, 55, 40, 60 are all there. But the concept, what I was explaining, may be recalled. The basic is this. When you are having an arrangement under JDA, a particular share, X, Y, Z, whatever it is for you and for me. What you will be accepting as a builder or developer promoter, what you will be accepting to the landowner is maybe 3 flats I will be giving you, 5 flats I will be giving you, is your version. For that 3 flats or 5 flats or whatever it is, you will be liable. The time of supply will be clicking till when you are having this certificate of completion for the purpose of this, you will not be liable to pay. That time when you are about to hand over or first occupation, whichever is earlier, you will be liable to pay as promoter the construction value related to the similar product. In other words, say for example, in your example, Mr. Govind Raju's example, the 45% land is held by him, 55% land is for me. Relatively, let me say 9 flats for me, 11 flats for him. That's how the understanding is. If you are saying that 9 flats I am going to give as a promoter to the landowner, the 9 flats value will be decided on the basis of the flats which are sold nearest to the point of issue of completion certificate or first occupation, as the case may be. Completion certificate will be there in metro cities. First occupation at least will be there in case of DTC cases or other things. So you will be able to refer that. Out of those sold items to the third parties, the 11 flats, try to see that which is similar flat that is about to be given by you, hand over to you, by you to the landowner. Seeing that one, take the value of that one, remove the 1/3 value towards the presumed value of land for the purpose of section notification 11/2017 CTR, and you arrive at the value. In other words, third party is buying for 1 crore rupees the flat. 1 flat. Those 11 flats are there, 11 into 1 crore rupees you are selling. If that's the case, when you are giving 9 flats to the landowner, what will be the value for the purpose of this? The comparable flat is for 1 crore rupees. The value for this is all 1 crore rupees. The nearest value as a flat has been constructed in the nearest time, the value is increasing. 1.2 crore rupees is the price at which at the latest time you are selling to a third party. So the comparable value is 1.2 crore rupees. No, sir, yesterday I sold for 1.5 crore rupees. Then 1.5 crore rupees is the nearest value. Because till the nearest time you have to wait and see. Sir, yesterday I got this sold for 1.5 crore rupees to unknown third party. Today I got the completion certificate. And I have to hand over to him today or tomorrow the landowner's keys to him. Fine, that's a perfect situation. Now you see what is the nearest value, 1.5 crore rupees. To whom you have done unrelated party. Take that value, 3 flats, 885 square feet or 1,200 square feet. Correct, pick it up. Same value of 1 crore rupees or 1.5 crore rupees. The 1.5 crore rupees into 1/3 you remove it for the land value, mandatory deduction, something like your section 24 for income tax purpose blindly deduction is that. The 1 crore rupees will be the value. For that 1 crore rupees, 7.5% will be applicable. So what will be the value? That you are 7,50,000 rupees will be GST on that. That answer matter. So this is all. The valuation is very clear. As I several times told, wrongly it is being propagated under the propaganda that it's confusing, it's not clear. It's clear. Whether you accept or not is a different one. You are unhappy with that kind of value or the tax involved in that one is a different one. The process is very clear. There is no confusion about that. Absolute clarity is there. Right. Any other questions?
I'm sorry. Can the enforcement officer challenge the valuation as the goods are under movement? I mean, after detaining the vehicle.
Okay. See, movement of vehicle is incidental, sir. See, you may move a vehicle with all due respect. Just for example, I'm telling you, clandestine movement is also a movement. That doesn't matter. See, you raise an e-way bill honestly. As far as you are concerned, you are honest. And you move the goods sincerely, fine. You raise an invoice for a right price, you believe, fine. That's perfectly okay. But if the officer is believing that, sir, these goods are involving some other thing than sole consideration. What is that some other thing? He has to explain and establish in a court of law. That's different one. If he believes that these goods are to related parties only, possible. If these goods are involving something else than price, fine, possible. So if those cases and all, certainly an interceptor vehicle of GST department can stop this. They can question the valuation of this. They can issue the notice of this. But this is the reply for the question what you asked. Additionally, I would add one more thing. The unfortunate matter is most of our traders, a little small portion of our professionals, unfortunately, not clear about the limitations of the officers who are intervening the consignment. Very detailed provisions are there. What an officer who is intercepting a conveyance is supposed to do. Just like that, by issuing a MOV1, MOV2, they cannot just hijack your vehicle for left and right for a long time. The Joint Commissioner is supposed to record in clear terms that why the vehicle is detained, on what background it is there, and why he is suspecting, and why you are having right to deny that you will pay that. It cannot be a legalized robbery to stop your vehicle and ask you to 300% penalty and make you to suffer at that point itself, especially in case of a high lead time oriented business, or a case where it is involving perishable goods, a case involving immediate supply and all. It cannot be a way of threatening actually. There are very good officers who understand the business constraints, give you reasonable time, proper notices and all. There are very few officers who are trying to drag the matter to MOV7, compel you to pay the money and then only move the vehicle, which is not fair. You cannot be a scapegoat for this kind of wrong practice. Please be aware of the points. But coming to your question, the reply is fairly supposed to be told that, yes, the officer who is intercepting from the enforcement department, preventive wing, DGSTI, or any officer who is doing investigation has got right to stop the conveyance and raise query against the valuation, which he honestly believes, honestly, underline, honestly believes that is wrong, incorrect, has got right to claim. So you have got equal right to prove your own stand, that why it is right and why your stand is wrong. Yes, it's possible. Yes. Any other questions?
Yeah.
Yes.
Whether fiat case will apply where goods are sold below cost for GST.
Yes. See, the fiat case is a very excellent case, you know very well, which was strictly following the Central Excise Act 1944 provisions. So whenever a manufacturing is happening there, below the price, how you can sell? It cannot be possible at all. Law is not providing. Law is the word what it was referring was the SIRC law relating to Central Excise Act. Now coming to this law is not stopping you from anything selling below the price, but unrelated party, is it there? Price is the sole consideration, is it there? Price payable or paid should be apparent, is it there? All these reasons should be there. In a distress sale, sir, after all, I am going to sell and run away from the business, sir. I'm ruined already. I'm a broken guy. 1,000 rupees is the stock. I have to push it for 700 rupees and close the shop and run away. If that's the case, law cannot compel me that sell for 1,000 rupees. You buy. If you are compelling as a lawmaker, you buy. Why? I don't have buyers. That's depending upon market. I'm already ruined. I'm a broken guy. So that cannot be compelled. So that provisions are there. But please see that in which situation is applied there, and you can, not a problem. You are not under compulsion. Right.
Okay. Next is supply from warehouse to the branches is reportable in the GST return.
Sorry, sir. Last sentence I missed it, sir. Sorry. The voice was.
Supply from FTZ warehouse to their branches.
Okay.
Is it reportable in the GST return?
See, it's a serious problem as far as GST preparing professionals are concerned. SCZ unit, for the time being, I'm saying, please don't, I'm not meaning it, please don't understand that. SCZ is a different country. From that different country, so-called foreign land, the goods are moving to India, domestic tariff area. Whenever the goods are moving, so naturally it will be warranting the customs provisions. Under section 14, it will be carried out. So the process of customs import is cleared. Import clearance is given there. Bill of lading is cleared by the proper officer in the SEZ zone, who is customs officer. Goods are moving after paying customs under GAR 7 challan and reaching the branch or warehouse or whatever it is in domestic tariff area. But the problem here is how to report, because it is a non-GST transaction. Import is purely covered under the domain of customs. GST has got nothing. No, sir, you are telling wrongly. I was able to see in the challan IGST at some percentage 18-20. The IGST is collected as customs duty under GST law, under customs law. So if that is the case, what has happened there is purely an import. In the import process, once you have completed that, there is nothing to report here, but that can be reported under non-GST supply, both in GSTR 1 and GST are 3B. 31A is the para for taxable supply. 31B is the area for zero rated supply. 31C is the ratio for the purpose of your exempted supply. 31D is also there for you to say that non-taxable nil exempted items. It is there. You can mention. So why should I mention? So you only told that it is a non-GST item. Why should I mention? Sir, if you don't mention, today you are doing your GST audit seriously. You know very well the pains. How to compare a GST return and the income tax turnover or company tax turnover is a question. As GST auditor himself, you should prefer to see that it is declared then and there. Sir, if I'm not declaring exempted turnover, what is going to happen there, sir? 10 lakh rupees I received as a interest from fixed deposits. It's an exempted item under entry number 27, notification number 12/2017 CTR. Leave it. What is going to happen? Heavens are not going to fall. Heavens will not fall. But you will be in trouble when you are reconciling. That amount will not match. You have to do a reconciliation and present it. Rather, under exempted column, if you present it in para number 8 of GSTR 1 regularly, and in para number 31D of GSTR 3B regularly, how safe you are? Exactly what you have presented for income tax or companies act is matching to the version what you have presented in GST also. The values are very exactly matching. If not, what will happen, sir? It's a standard question, Indian question, typical Indian question. One way, please don't go. If I go, what will happen, sir? Sir, due date, please file it. If I don't file, what will happen, sir? This is a standard question. So now, if I don't do this, what will happen, sir? You know the results. See, the turnover declared for income tax or companies act purpose will be there, let me say, 75 crore, 89 lakhs. The turnover for the purpose of this, if you leave this non-GST turnover for by SEZ, if a high C sales not presented because it is non-GST, if an exempted turnover not present, if these things are all left like that, only taxable and other things you present. Your GST turnover will be reading in GSTR 9 itself, your annual summary return auto-generated will be reading 65 crore 90 lakhs. Your income tax or companies act balance sheet P&L will be reading a turnover 75 crore 93 lakhs. The difference 10 crore 3 lakhs, nothing but this, but you want to explain. If you leave it, unnecessarily notice will come that there appears to be prima facie difference between IT return where you have committed a higher, huge turnover, but you have not declared that. Explaining, nothing is there. Really. The office is going to get irritated. Yes, sir. Why are you disturbing me? You will say. So not necessary. That's why I'm saying. So you can present it under non-GST column. It's there. In both returns, it is there. You can present. Okay. Right. Any other question? Last question. It's time, sir.
What is the implication of GST on development of land?
Sorry, sir.
What is the implication of GST on development of land?
See, development of land, as you know very well, is done only as groundwork actually or earthwork. You develop the earth, make it saleable plot and keep it ready with you. Maybe you will have some sundry incidental maintenance work, maybe illumination of that, keeping that layout and other things and all, maybe some name board, some entrance, some compound wall, something, or a very good surface with some kind of American Mexican grass. That's all you will do at best. You will not have any other amenity there. So when you do this process, if you are doing to other person purely service, somebody is a landowner, you go and do a development. That is what you are doing is land development, land leveling work. 18% you have to charge on your money what you are getting. No discussion about that, no disputes. It's the other way around. Not so. Rather, if you try to see that your own land, you spend money on that, you develop it, you keep the land. The land is developed as a product for you. That's all you are keeping with you. When it is sold, a nicely maintained land is also land. Badly maintained land with bushes is also land. When you are selling it, it is outside the GST purpose. It's not there at all, actually. Having sold, but story is totally different. This is the reply to your question. But the reality is totally different. Beyond that, only the real story starts. This is not the end. Having said that, all right, you tell your land buyer, yes, bought your land, yes, become landowner. You say your landowner that for 3 years, I will maintain your land till the area is developing. This is the standard condition, standard commitment, what the land developer is committing. There, you collect the money either upfront or periodically. If you do that one, you are rendering service over and above the transaction relating to immovable property. See, selling is over. You have sold the immovable property, that person has purchased the immovable property. When immovable property is involved, Section 7 of CGST Act is got nothing to do with this. Clear. State stamp duty you pay, finish the story. Having done that one, it has become the piece of land owned by another person, in which you are committing that I will be maintaining the land very well in the same condition as is various condition till so date, 3 years, 5 years, something you say. If you do that one and collect the money for that one, periodically liable you are liable. If you do that upfront and say that for this condition, this is the price, you are liable. Sir, let me say that I will not tell at all, sir. What will be? This is something like, sir, if you don't go with the license and drive your car, if you are not possessing readily, you will be punished by the sergeant. Oh, nice. The moral of the story is, don't get license at all from the government. No license, no carrying. Very nice. That's not the version actually. The version is totally different one. What we are trying to say is, if you say the value, you are safe. 18% on that value only will be there. If you don't say, your land development cost will be estimated by the officer and say he will say that, sir, you pay stamp duty to state government and all is not story. You sold for 10 lakh rupees this piece of land. Out of that 1 lakh rupees, I am able to estimate to be the value of land development because you are assuring that next 3 years I am going to take care. 3 years value is 10 lakhs. I have decided. That's what I told you already, that line story. So you know the law, I know the law. Whether the lion knows the law is the question. Please don't invite the lion, it is dangerous. Okay, I think that's the last question, Mr. Chairman.
Thank you, Prasanna Krishnan. Nicely you had put it. You may be vegetarian, but the lion should also, it doesn't matter whether lion knows that you are a vegetarian or not.
Exactly.
That's nicely put.
So nice.
Thank you, Prasanna Krishnan, for a lucid and nice presentation and taking a lot of questions which had come in the end. And members, we are having a program tomorrow on issues in capital gains, which we will request you to register. And one big program which is coming in the month of October 8, 9 and 10. We are planning for a digital conference, 3-day conference. I request all members to kindly take benefit of it by registering. Thank you. Someday we'll call you again to the Brahmaya Hall. Thanks for your time.
Pleasure is mine. Thank you all of you. Thank you, Mr. Abhishek. Thank you very much.
Thank you, Chairman. Thank you.
Thank you.